Index trading S&P 500 versus NASDAQ in a tech-driven market. Hello traders, welcome back to the FXCM YouTube channel. Today, we're diving into index trading, specifically the S&P 500 versus the NASDAQ, and how tech dominance is reshaping these two major benchmarks in 2025. S&P 500, the broad market barometer. The S&P 500 represents 500 of the largest U.S. companies, making it a cornerstone for traders who want broad market exposure. It's diversified across sectors like tech, healthcare, energy, and finance. Key advantage? Lower volatility compared to tech-heavy indices, making it a preferred choice for swing traders and long-term investors. However, in today's market, even the S&P 500 is heavily influenced by tech giants like Apple, Microsoft, and Amazon. A big tech earnings surprise can move the whole index, even though it's diversified. NASDAQ, the tech powerhouse. The NASDAQ 100 focuses on non-financial giants, with tech making up the bulk of its weighting. Think Apple, Tesla, Nvidia, and Meta. Why trade it? When tech rallies, NASDAQ delivers outsized gains, making it attractive for momentum traders and those seeking high beta plays. But, with great upside comes greater risk. The NASDAQ is more sensitive to interest rates, earnings expectations, and innovation cycles. A negative outlook in AI or semiconductors can trigger sharp sell-offs. Which index is better in a tech-driven market? S&P 500, stability with tech exposure, ideal for balanced risk. NASDAQ, pure tech momentum, higher volatility, bigger moves. In a tech-driven bull market, NASDAQ usually outperforms. But in risk-off scenarios or rising interest rates, the S&P 500 tends to hold up better. Index trading isn't about picking one, it's about understanding correlations and volatility. Some traders hedge by trading both, using FXCM tools like market scanners, price alerts, and sentiment indicators. Like this video and subscribe to FXCM YouTube channel for more on indices, Forex, and global market strategies.